I've made a few videos like this. Oh, sorry, I think this is number 3. So I got a friend who's come into some money and made a video about how they called me up and said, what do I do? Then I got a call to say the market's gone down. What do I do? And now I've had a call of I don't want to invest in America anymore. How do I do rest of world investing? So it's interesting when someone who's brand new gets in touch. So what did I say? Because they were like, just remember they're very new. So they were like, I don't want to invest in anything in it to do with America anymore. What's like the ETF or what's my choice? So I just caveat, as I tell them, I am not a financial advisor, blah, 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 blah. So entertainment only. This is my opinion. There is something called the EFA. Now that's the non-US, so rest of world ETF. That's the go-to for non-US related investments. I then also said there are country-specific ETFs. So I'm a big fan of EWZ or EWZ. For Brazil, there's a Mexican one, there's Chinese ETFs. You can pretty much now, I got a feeling there's more ETFs than there are stocks. So you can pretty much drill down to any industry, any country, any sector globally. But these are all listed on the US market. So just as something to remember that you're still kind of semi-supporting the US because these ETFs are I think for the most part, 99% are listed on the US market. Anyway, so I told them EFA. And I don't know what they'll do with it. They might do something, they might not. And she hasn't come back asking about any like further specifics. So what triggered this video? Because I keep doing these like, I just think of something and think I need to get this out there. And apart from that call, and that's probably now the sentiment. Outside the US, sentiment is probably, I don't want to be in the US. And we're seeing that. Treasuries getting sold, gold going up, Bitcoin staying strong, stocks getting hammered. If you're an active trader or stepping into that world of active trading, and we'll look at a chart in a sec, is Trump has, like right now it's earnings season. And any trader just couldn't give two hoots about earnings right now because the impact of Trump is greater than the impact of earnings. Tesla's about to come out. It'll probably be out by the time this video goes live. There'll be some look at Tesla because of Elon, because of his relationship to the Trump, to the king, to the dictator, to the great one. I'm joking on that. What Trump has done is he's made short-term investing a gamble. So how do we cope with that as traders? Because you can have your best technicals, your best fundamentals, your best whatever's going on, but if he drops a clanger, like he's attacking Powell at the moment, Fed chair, and market doesn't like that, but you never know when Trump's going to drop that tweet. So how do we cope? Well, VIX is up. So if you position size, you always want to be position sized. So if you're a active trader, right now, if you're still trading the same size as you were 3 months ago, in my humble opinion, you're trading way too big because the moves, if you size according to the VIX, you should be like half your position size, maybe even smaller. So to have, because the S&P or generally stocks are moving like 2 or 3 times what they were moving 3 months ago. So just remember that if you're new to this, you need to position size according to the volatility in the market. And you can just extrapolate that. If you imagine stocks doubling and halving, you shouldn't have the same position size if stocks only go up or down 1 or 2%. It's easy to see when you just stretch out your inputs. I hope that makes sense. So let's have a quick look at just some of the charts, and I'll just use them to explain what I'm going on about. Okay, S&Ps, ignore these fibs. I leave them on. I don't know why. I've got a fib from the bottom to the top, and then another fib from this like drawdown in 23 to the top, and then I've got a blue line from a previous like long-term high back here. And I don't know. It doesn't have any bearing on my trading whatsoever. But weirdly, market stopped on that kind of area, and then it stopped again on that kind of area. But for me, it's totally untradeable. So just ignore it all. I mean, you know, it weirdly, it kind of bounces around these, but some it just falls through. So anyway, just ignore that. Right, so what I'm saying is, if we look back here on the left, you got very small, well, back then they seemed like big bars. Do you remember these days here? These red bars over here? That seemed like a cataclysmic day, right? When we were down like 2% or 1 and a bit percent. And again here, we're like, oh my God, the world's crashing. I mean, now look at the size of this green bar. I mean, it's months in one day. And that's where you've got to position size to the volatility. It's such a crucial, there's a few things to me that mean traders are here in a year's time, in 2 years' time. And one of them is them knowing their risk of ruin and position sizing. And this arena that we're in with the Trump is one of position sizing. Like I say, if you're trading the same size today as you were back in October, November, December, even January, you're way too big. Because this is now lotto land. I mean, if we look at these moves, this down move here, boom. This down move here, boom. This up move here, but from like opening up low and then down, then up. I mean, look, it's lotto land. And if your strategy, I mean, it's like everything's thrown out the window. Any technical or all these little things people get involved in, it's literally thrown out the window now, because at any moment he can drop that tweet. So just make sure your strategy is in line with lotto land is my main point, and that your sizing is right now probably as small as it's ever been. And the way you can, I always like to mathematically calculate my risk, and the easiest way to do it is you call up the VIX. Let's just get a bit of history. And you know, when you're at these lows down here, fine, position size accordingly. I think 18 is the long-term average. So you could take a base. You could say you risk $1,000 when it's 18. So for me, as it decreases, I would factor out how much more. So maybe if at 18 you're at $1,000, maybe at 10, well, you can do it just purely graded. The low is around, well, here the low is around, around 12. So you'd want to be a little bit bigger down at 12. But then when you're at 18 and you go up to 36, I'd be at least half size, and then so on and so forth. And you know, when we touched 60, you cannot be small enough. And we seem to have found our way down to 30. That seems to be the Trump vol. And gravity would have us heading back down, but how long we will stay volatility elevated, well, who knows? Because right now things are unknown. We did not know the Trump tariff playbook. We did not know China's playbook. So right now, VIX is perfectly priced up at 30. So that I would work out a calculation that gives me my perfect position sizing according to the VIX. That would be my suggestion. That's if you're struggling, you know, because what you don't want to do is, a lot of people are like, oh, going to sit on the sidelines, wait for it to cool down. This is the most opportunity, when the market's wanging about like this. This is the best you'll ever have it. But what you've got to do is is size up accordingly. So anyway, I've said that 1,000 times. And the next thing, don't get too fixed with a position. There's so many people, Ray Dalio, God, if he hasn't predicted the end of the world 40 times by the end of this month, you know, he's a couple calls shy, you know, he can't get on TV enough. So just be careful what narratives you fall for, because the crucial thing is looking at price. The tariffs have knocked off a few $1 trillion. The companies are reporting right now, but no one cares because Trump's the main news item. And we're waiting for these tariffs to play out, because who cares what your earnings call is when tomorrow a tariff might change and that earning call is blown out the water. That's kind of what's going on. So I'm sizing down according to the volatility. I'm trying to have a strategy that makes money just with crazy gamble lottery style markets, and trying to find value on stocks that have been super hit. All right, I hope that was useful, maybe thought provoking for people that are newer at this, and best of luck out there.